Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the Daily FX walkthrough. We're going to get started in just a moment. What I'm going to do tonight, as always, is walk through the latest technical report by Jamie Setley at DailyFX.com. So let's go ahead and pull up DailyFX.com. And usually the first thing I do when I get there is scroll right down to Jamie's report. So let's see what he has to say in the synopsis on top. Pressure is building up behind the U.S. dollar, leveraging the potential for short-term breakouts and momentum. So obviously the U.S. dollar has been very strong over the past couple of days. And in terms of the euro, the most bearish count places the euro dollar in a third of a third down from 141.79. 138.20 is potential short-term resistance. And also the last thing he says, please keep in mind that the triangle and flat counts are still valid at the current juncture. So if you were listening to my reports last week, there still is a possibility that this could be a B wave forming there. Again, with prices taking out that 138.80 low, I've personally abandoned that idea, but it's still definitely within the realm of possibility. So that's something to look for moving forward as well. But I want to focus on what we spoke about last time, which would be the dollar yen. And Jamie says, I favor the downside as long as price is below the trend line from the 110.71 top. The 200-day SMA is sloping down barely and right at current price. Whichever way this break goes, it should be violent. So let's go ahead and pull up the dollar yen to see the exact specific levels that Jamie is speaking about. That would be this resistance line, this trend line, downward sloping trend line up here, as well as the 200 SMA. So those are the two price levels that could be offering resistance moving forward over the next day or two. And if we zoom in a little closer, we can see that a few days down the road, this could take a little longer actually. You might get a convergence of these two levels, which would be an excellent confirmation and a great sign that this area could indeed act as resistance. But moving forward, personally, I would keep an eye on this trend line and obviously also the 200 SMA, but I'd be more in favor of seeing a spike through that 200 SMA to that trend line, and then ideally a close back beneath that 200 SMA, and that would be an excellent entry signal at that point. Once that 5 p.m., this is a daily chart obviously, once that 5 p.m. chart candle closes, we might enter at that point with a stop back above that spike. So that's something to look for over the next day or two in terms of a spike back up to that resistance line. Again, the market's been very choppy lately, very violent, very volatile, and I would recommend taking very small positions in terms of how to trade the market at the current moment. Again, very volatile, and you have to manage your risk very, very well in this environment. And what I would also recommend is keeping up to date with Jamie's reports. Things can change. He does use Elliott wave analysis, which is a great way to view the market. There are always multiple counts going on, and things can change, in between reports. So it's a good idea to keep your eye on his reports, and they are released twice a day. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.